Hello viewers and welcome to our program, The Business Brief. I'm your host Alois Vinga, and our guest in the house this afternoon is Kiran Maksheri, the First Capital Bank of Zimbabwe Managing Director. Welcome, Kiran.
Thank you. Pleasure to be here.
So we are here to discuss the half-year financial performance of the bank for the period ended June 30, 2022. And maybe to begin with, would you mind sharing with our viewers how you perceived the operating environment?
Yeah, no, if you look at the operating environment, let's talk about the macro challenges. We know we're globally in a difficult situation at the moment with the situation in Russia, Ukraine, and the consequent impact there in terms of energy prices, commodity prices, and you're seeing that inflationary pressure in Europe and the US. And if you translate that locally, you have the similar inflationary pressure, although obviously a lot more exaggerated than we're seeing in Europe and the US. And that's driven by the currency devaluation, and it's also driven by local pricing issues. So they're big challenges for the business. We also, if you add to that, I think there's two other aspects that locally in Zimbabwe that I think are really challenging. One is at a macro level, policy stability. It's very hard to run a business and plan a business when policy changes regularly. We need to have more stability in terms of that. And the other one is pricing. Local pricing is a real challenge. And we have pricing in terms of, from the perspective of, we have different rates. How people charge, they're based in US dollars, how they charge in local currency. Do they use the parallel rate, the official rate? If they use the parallel, what's that rate? We have some pricing practices that are incredibly challenging and make doing business very expensive, and that's in some of the professional areas where we charge as a percentage of a budget. Doesn't necessarily bear relation to the cost of providing that service, and that makes it very expensive. And we have that where it's a hindrance to actually investment, because if people want to borrow money and register a mortgage bond, it becomes very, very expensive. And then we recently had a situation where locally we tried to procure a service, and it was 78% more expensive than the same service procured from South Africa. How can that be right? So we've got to get those macro challenges sorted if we really want to drive the business and the macroeconomy forward.
Okay, now that you've touched on the issue of inflation, soon after this wave of inflation, we then saw the central bank, Reserve Bank of Zimbabwe, coming up with quite a number of strategies, hand in hand with the Minister of Finance. Have you seen any positives from these measures as a bank?
The thing about fighting inflation, in my view, is you always have to go through some pain before you get to the other end. So we are seeing some pain at the moment. But to answer your question, I think we're seeing some positives and stability in the market. You just have to look at the more recent inflation announcement that's come out, where month-on-month inflation is broadly stable or maybe coming down slightly, which is a very positive sign. Now, the challenge on the other hand is, we are seeing huge tightness of liquidity in the RTGS in the market. And we need to get the balance right. We've got to make sure that the policies that we have now are sustainable and continue to be managed going forward, so we don't have another flood of liquidity coming into the market. You see a run in the parallel rate, and then you start to see a consequent inflationary impact. So that has to be managed carefully, and it's not an easy task for the government or the Reserve Bank to manage that. And I think the added to that, there is really to make sure that we get the balance right in terms of tightening that liquidity to manage inflation, but don't go too far. Because in some areas I'm starting to see some pressure on supplier payments, for example, because people haven't got RTGS to pay, and that can create an impact that maybe we're not anticipating. So we have to make sure we get that balance right.
Okay, so we also saw the coming on board of gold coins. How do you perceive this as a bank? Do you think it's positive or it's on the negative side?
If we look to our nearest neighbour, South Africa, they already have gold coins, the Krugerrand, etc. in place. So from a perspective of mopping up RTGS liquidity, it's been successful. So I think it's hard to argue with it from that perspective, and it's one of the key components you mentioned around the macro policies that the government and the Reserve Bank are trying to put in place.
Okay, now coming back to your results during the half-year period, what are the major highlights which you'd like to share with our viewers?
Well, we've talked about the challenging environment. So despite all of that, I think we've had a very positive first half of the year on the back of a good year last year. So if I talk in inflation-adjusted terms, because that's really where the value is, if you like, in terms of results. So we posted for the first 6 months 472 million profit. It's broadly flat to last year. I think it's 2% down, but broadly flat. But below that, we also had our deposits grew in real terms by 14%, up to about 41 million from 36 million. And our loans increased by 37% from about 16 to 22. So that's positive growth in the balance sheet and positive growth in our business that will translate into future returns. We're also seeing in our lending book, what we're doing is we are weighted roughly 45% towards the manufacturing, more the productive sector. And within that loan book, there's 25% goes to agriculture, there's 18% going to manufacturing, and there's further investment in terms of services, etc. So we have quite a productive loan book. The interesting fact that I'm seeing in the first 6 months is a greater shift into US dollar denominated deposits and liabilities. We had about a 50-50 split at December. We're now seeing that at roughly 65% weighted towards US dollars. So we're seeing that kind of dollarization to some extent coming through in our loan book, but it's also possibly combined with the tightness of liquidity on the RTGS side in the market. Now within that, we are our loan, if you like, loss ratio and a non-performing loan are all sub 2%. So all of those are very positive results and maintain the trajectory we had last year.
So how have you managed as a bank to post such positive results in this highly challenging environment?
Look, I think it comes back to the core of what banking is. We're building a brand in terms of what we stand for as a bank. We're also managing to control our costs, and we're focusing on the core essentials of what banking to me is about. It's about customer service, and it's about helping the customers come up with solutions so that we can give them an attractive proposition that also works for them but also works for us.
Now, on the proportion of the loans that you have managed to disburse during the period, you mentioned that quite a significant chunk is going towards manufacturing. Which sectors in the manufacturing sector really are taking up these loans?
It's mainly the FMCG, so it's the fast-moving consumer groups. It's also manufacturing as well. So you've got agriculture, which is the production, but also then you've got the manufacturing that comes at the back end of that.
So now, compared to a similar period last year, what has been the shift in terms of the take-up of the loans by the manufacturing sector and agriculture?
I would say it's weighted more towards agriculture than it was this time last year. I don't have the exact percentages in my head, but it's weighted more towards agriculture.
Okay, so what proportion of this was taken, what proportion of the revenue, the profits that you recorded is made up of net interest income, so it's commission fees? So
your net interest income is about 30%. I'll talk about income. It's about 30% of our income. Our fees and commissions are roughly 30% of income, and the rest comes from a combination of investment trading income, such as FX income.
So there's also mentioned that you recorded 290% in foreign exchange trading. Would you manage to just shed more light on that?
Sure. Let me just make a couple of points on that. It's driven by a number of things. It's driven by an increase in the values and volumes of trades that are coming through us. But it's also driven by the devaluation of the currency. So when you report in local currency, if you've got a net asset position denominated in foreign currency, that revalues as the currency devalues and you make exchange gains. So there's an element of the two that are coming through there, which would probably be split roughly 50-50.
Okay, so would you also mind sharing with our viewers the capitalization levels held by FS Capital Bank?
We are in a fortunate position. We're a strongly capitalized bank. At the half year, our capital position was equivalent of 44 million, our core capital, $44 million US dollars. And as you may remember, the minimum threshold is 30 million from a regulatory perspective. Aligned to that, if we look at our Tier 1 ratio, that stood at about 27%, and our total capital ratio of about 34%. So well in excess of the regulatory requirements. And that allowed us also then to declare a dividend, which is very important, that we declare a dividend and we give money back to our key stakeholders. And we declared a dividend of 44 cents per share.
So now, are there any new products which you have come up with as a bank which can benefit members of the people and public?
Yeah, we have a number of new products. You know, we have launched a number of things this year. We've continued to expand our money transfer agency remit. We also have launched a new mobile banking app, which is a significant upgrade on where we were last year. And I think, unbiased opinion clearly, I think it's one of the best in the market. We've just launched a internet banking platform, again an upgrade to what we had previously. Now, like anything, these big IT project launches haven't gone as smooth as we would like, but we've worked through the teething issues and we're now in a very stable position, and we're working through additional enhancements.
Okay.
As we look forward, we've got more products coming down the pipe, and we've got plans in Q4 and into next year. Again, new point of sale offering, which we're actively working on. We're working on some e-commerce tools, and there's other plans we have in place that should become known end of this year into next year.
So I also understand that during the half-year period, you partnered the European Investment Bank for 12.5 million euro loan facility. Would you mind sharing details on the take-up of that facility?
Yeah. So the take-up is we've got a full pipeline of people wanting to draw down on that facility. So it's not all drawn yet, because you know, as you sign these facilities, you still have to go through further due diligence. You have to make sure the customer's credit case is right, and we get all of those approvals. But I'm confident as we go through the Q4, we will have a significant drawdown on that, if not fully drawn down by the end of the year.
Okay, now Kiran, as we round off the conversation, you know, First Capital Bank is an institution which operates in quite a number of countries. What's your take on the banking sector market in Zimbabwe when compared to other countries where you're operating?
It's a good question. Look, I always say Zimbabwe to some extent is unique. We have our own challenges. Now, you see in this part of Africa challenges in many of our markets. But just so the viewers know where we operate, you know, the story started in Malawi 27 years ago. And so we operate in Malawi, we operate in Botswana, we operate in Mozambique, Zambia, and Zimbabwe. So there's 5 operating, if you like, countries, nicely pinned around Zimbabwe, so it works quite nicely. And we're also quite in my view, we are a regionally focused bank, and that operates a lot of advantages for our customers, in that if you operate in that area, because we're fairly small, or relatively small, we're nimble, and we can get things done quickly. And we find that now increasingly with customers, whether in Zimbabwe, they're looking at Malawi, Botswana, Zambia, we can help them enter those markets and work with our sister banks in those countries to drive advantage for our customers.
Okay, viewers, that was Kiran Maksheri, the Managing Director of First Capital Bank Zimbabwe. Thank you, Kiran, for your time.
Thank you.
So for these and other programs, please do not hesitate to visit our platforms, our website, www.newzimbabwe.com, our YouTube channel, Destiny TV, and our Facebook page, newzimbabwe.com. Otherwise, enjoy the rest of your viewing.